Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Today, guys, we again will talk about the Japanese yen because, I again haven't found any interesting on other currencies. Maybe on the Canadian dollar there could be some interesting setup on the daily time frame chart, some sort of the bread and butter as well. But there we have not absolutely pure bread and butter setup. That's why today I have decided again to speak about the Japanese yen, because currently on the Japanese yen we should understand what is going on and what's going on with our setup that we have discussed previously. Well, guys, speaking about the double repo pattern, so you can see market hasn't quite closed below the 3x3. And in general, personally, I prefer to see some faster move to the downside when the double repo is forming, since here it's a bit slower move to the downside, and the pure perfect double repo pattern suggests some faster acceleration, because in fact this move down is nothing more but capitulation of the bulls that weren't be able to push market through these highs. That's why when the market fails to pass through these highs, in fact that turns to the capitulation of the bulls, and they give up, and market just showing the faster acceleration to the downside. But here it's not quite the capitulation; it's just a gradual move to the downside. Well, I do not know. Maybe we will see some acceleration a bit later. But currently, I don't see any moments that could say that this scenario is vanished and it stands under question. But that's just a bit the observation that this action is not very fast. Well, let's see what will happen. And another concern is the same that we have discussed yesterday, is that this target hasn't been hit yet. So initially, as you remember, as we have discussed this moment in the weekly research, we said that it will be perfect if market will test this target by the second top of this pattern. Initially, I thought to see second top that will hit the target, and then market will move to the downside. That could be the perfect situation. But right now, that hasn't happened, and that some sort of the disturbing factor that stands right above the highs, and market hasn't quite hit it. That's when market stands right slightly below some significant target. It always some sort of the disturbing factor that doesn't let us to relax and just monitor how develop this double repo pattern. This moment or everything every time tells us, look at me, market hasn't quite reached me. So that is the hazard for the possible downward action. That is a bit some moment that makes investors nervous, makes traders nervous, because they think about it and always have the concern that market still could return right back and hit this target, because we previously, when we make the analysis on different currency pairs, we have seen it many times when the market stops within some few pips from some target, and it looks like it start move to in the opposite direction, but later returns right back, hit this target. Well, that's why these moments I do not like to have that moment on my back when I trying to take the position, at least if I do not have the break-even stop at my back as well. So that's just some concerns that we have on the daily time frame chart. Well, on the intraday charts, on the 4-hour time frame chart, we see some coil around. Market is coiling around this 618 support and the weekly pivot point. And just you can see a very tight consolidation. This Japanese yen stands. Well, that's normal, because if you'll take a look at the hourly time frame chart, we will understand why it's happening. First of all, take a look that splashdown was nothing more but the completion point of this lightning bolt ABCD pattern. So this piercing down from the technical point of view was happened due to the gravitation of the market to the objective point. So Di Napoli tells in his book that very often when the market has some target slightly lower than the support area, market could pierce the support just to complete the objective point, to complete the ABCD target, and later return right back above this area. It's not necessarily means that this level has failed. But here we have, here we are most interested with this retracement right back up, and we should understand what to expect from this upward direction. So now we understand why this retracement has happened, because market has completed this ABCD target right at the fifth support. That is just respect and reaction on the reaching target of this downward action. In general, this retracement up could reach 102.90 area, that is 618 resistance of the whole move down. After the completing point of the ABCD, that is in general could happen, and even reaching of that area will not mean that market will not continue move to the downside. This could be just to extended retracement to the upside, and that could turn in fact to some greater ABCD pattern to the downside. Well, currently it's very difficult to identify any pattern that could justify potential targets of these retracements. Well, one thing that I see here is some sort of the three drive buy, so three drive sell pattern, sorry. So that could be the first drive. This stands at 127. That could be the second. Third drive should stand around 102.80, 103 area. So you can see this combination of the 1618 extension from the first swing and 127 for the second swing. But that is just some sort of the extensions game, since the three drive pattern usually looks a bit different. It usually takes the shape of the wedge. Here it's very difficult to call it as the wedge pattern. Maybe here we could get some kind of the reverse head and shoulders pattern that also is a bit skewed and choppy, not very clear. Okay, so it's not very clear pattern here, but its extension will stand somewhere in this area, I suppose. So if we will measure an extension of this swing, yes, 127 we have right around the 102.90 area, right at the 618 resistance. Maybe some sort of the ABCD pattern also could lead market in this area. Other words, if market is really bearish and it's really intends to continue move down, it should not move above this most recent swing down. If this happens, the market will return right back up above this area, somewhere in an area around 103, even 103.10, this area. Well, that could be the greater risk that market will not continue move down and will continue move to the upside. Maybe right to the 103.50 area to hit the target that hasn't been hit. That's the target that we have just discussed. Well, that's in general the moment to watch for today's trading session. So first of all, watch for development of this retracement. Also, guys, some of you I know watch for the butterflies on the bottoms. I would like to use such butterflies, but probably here we also could get some sort of the butterfly to the upside. So that could be left wing, that's right wing. But in general, this butterfly will have the same target, somewhere around 103 area. So that's the major level to watch for today. If market will reach this area, that's okay, and turn to the downside, that will be normal. But if market will break this area to the upside and move again to the 103.10 area, somewhere in this area, it could be the menace for the hazard for daily double ripple pattern. So that could lead to the destruction of the bearish setup on the daily time frame chart. That's the development that we would not like to see, speaking from the bearish point of view. Well, that's in fact that I would like to share with you on the Japanese yen. Let's see what will happen if market will hold below the 102.9 area and turn to the downside. Well, in this case, we will continue to deal with the double repo setup, and I hope that we will get the confirmation of this pattern till the end of the current week.